Welcome everyone, it's Enrico Janko. I'm Signal, and we're powered by the mighty Team Alliance. We're a little late on the charts today, but we're on the charts today. So good morning. See what we're gonna talk about. I want to continue on our discussion and our look at price action, since it's the basis of everything that we're doing. All right. I just want to box in some activity. Easy way to box it in is you could go to a line chart like that, and it kind of shows it with a little easier where the intersections are. All right. What intersections are we talking about? We're talking about what we would call support or resistance, right? That's what we're talking about. Support or resistance lines, support zone, all right? Remember, we're always in a zone, an area. So we're looking to find out how the price action moves in an area, all right? Not just off one line, but in a particular confined area. You see right now the market is not even confined in this area right now because it's continually moving as I'm trying to put my lines on it. But that is how the market works, so no worries. Really, without a proper understanding of how all these market moves, we're not going to make any money. You're going to get the lessons of being unprepared in the market. All right, it's going to take some time. You're going to do some experimenting, but you're going to find out a particular style that works with you, and the particular style can fit into what I'm doing. It doesn't have to change or anything. Once what I'm showing you works and is going to work, so you can kind of continue on that path, just refining and tweaking what I show you on these charts. All right, so it's not a particularly simple task, but it's not one that is impossible either. Many people have already, passed through this journey, so you can do it also. It really all depends on how diligent you want to be in trying to find the answers. And when I say the answers, how diligent are you going to be in your study? Because the answers are right here. It's all in the chart. One of the lovely things about trading is that you don't have to worry about anyone else except the people that's in these lines. People that are somewhere in these lines that want to take money from you, right? I want to watch and find out where they can make mistakes at, all right? Right here we see some strength, right? We see buying up from 31.79.5, right? Maybe we'll take our line all the way down there, all right? Let's box in that area. We'll call that part of our area, and we'll bring this line down some more, right? We'll act like that's a little breakout right there. Your lines don't have to be perfect or right where mine is, because you're going to kind of learn as you go on where the lines should go and how the market moves within the box, right? I try to usually make the box intersect. You kind of see how this box is half is where the market is stopping, right? This half line will usually represent the strong bulls, the weaker bulls, the strong bears, and the weaker bears. That's how this half point usually sets up. All right, so you usually trade off this half point, and then when the market gets down here, it's a possible breakout, and this phenomenon down here shows you the strength in these lines in this box, because down here, if it breaks out, now the strength of the bears overwhelm the strength of the bulls, and the market tumbled, and now the strength of the bears started down here, right? And the bull strength will be further down somewhere. All right. These are things that we have to be able to take account of, look for, and know. All right. We have to know that these things are going on to make money in the market. We have to know it. We can't just think it's going on. We have to kind of know what's going on and assume and anticipate what's going to happen and make money off of that. All right. Nothing is definite. All right. None of this is definite, right? What we're just watching, we want to get to the point where we can tell where both the bulls and bears, they kind of temporarily are on the same side for different reasons, right? But they're on the same side. They're getting double pressure, right? And that will make your market move a lot of times when you get that type of double pressure in the market. And what I'm talking about with this double pressure is when you have we're going to, in this example, we're looking at the bears make a move, right? Let's look at this one. The bears make a move down. Look at these bulls made a move up, and then the bears made another move down. But this move right here by the bears made all these bulls have to sell out. That's double pressure. Selling pressure is there, and the pressure from the bulls having to get out the trade is there. And look where it occurred. It occurred at the top of this line, right? So at one point, this line was supporting everything that we were doing, right? Now it's resisting. It was a bull force at one point, right? This was a bull strength. Now it turned around and became a bear strength, all right? This is how the market reverses itself around, right? And this is how these historic lines still are important, right? We don't take trades just blindly off of these lines. We won't just say, okay, price is going to make its way down here, so it's going to bounce off this line, so we're going to short it as soon as it gets here. Or, we're going to short it, or when it comes up here, we're going to short it. Or when it comes down here, we're going to long it, We're going to buy down here, and we're going to short up here. We can't just do that off of, GP, just on automatic, right? You have to wait until the market actually reaches these points. And then when the market reaches these points, we have to wait to find out how the market could react at those points, all right? We don't respond to the presence of any of this that's going on. We just anticipate the origin of it, and we just take a position. We just take a position and wait until our position is confirmed, and then we can actually trade it. Okay? We always want to know how these reactions are being built up. Usually when a reaction is very quick, right, market speeds through, it usually doesn't like to do that. The market, for good trades, the market likes to have a visible fight, right? The market is messy. The market likes to have visible fights over price levels. And those visible fights form stability in the market. All right. See how we get some stability in a uniform move in the market. This uniform move is how big money moves their money. That's why it looks blocky like that, right? And that's how it looks uniform, because they know they have a certain amount of money to move, and they have to do it in a certain fashion so it gets done, right? If they don't do their process correctly, they can't move the money, and millions or billions of dollars could be stuck somewhere that is a losing proposition for that particular company. And they might not be willing to lose that much money at that particular time for whatever reasons. Banks and institutions and all these people that can move money are moving money for reasons that you have no idea. We have no idea what they're doing. but we know that they're strong enough to move money. All right. What we look for is the tension at these areas, and we want to know how the market is reacting to the tension. At this midpoint of this box, there's also tension, right? There's also going to be some tension at the midpoint of this box as the strong buyers start thinking about taking profits, because they have made some money on a small scalp maybe, or a day trade from 31.80 to 31.86, about 4 or 5 pips. They like 4 pip moves. They know they could get money in 4 pip clips. That's why a lot of times you'll see the market move 5 micro pips, 5 micro pips, and then just stop and just be sitting there, because the day traders that are trading daily high volume with their bots know particular sweet spots in the market, all right? And they'll move the market and turn it around depending on those sweet spots, all right? So we have to really know that. We have to know that. You see at this halfway point, you see we get a little, they're thinking about it. It just doesn't just run through that point. It didn't just run through it, right? It's kind of thinking and so forth and so on, all right? So these are the things we look for, especially inside this box area, right? This movement a lot of times is not going to be as strong as the reactions on the fringes. Maybe somewhere around in this point in there, as the market moves and shifts between up and down, buying and selling in this box, you might get some strong pushes. You will get some strong pushes. But the ones down here, up here at the fringes, are going to be more reliable as in terms of trades. All right. This particular support and resistance, when we talk about that, everyone knows support and resistance, or has an idea of what is meant. We all know that there's going to be points on the chart that the market has bounced off of and proved that they have been resilient to change in the long term, right? Some lines such as, let me see, can I find one for you while we're on here real quick? Such lines such as this line will always, be a line of demarcation. You could just look on this chart, you see this line is a line of demarcation, has been for quite some time, right? Has been for quite some time. We could go, this is on the 15-minute chart, right? We could go further back. And you see I have a couple of these lines all over, because those lines are always going to be strong. Those lines were created by the market activity itself on the last day of trading for the week, right? Those are historic lines. They will be broken at some point, and we use all our charting experience, and we observe when these lines are broken and the reaction that the market gives to those lines. Because that reaction, what's going on when it reacts to these lines, are going to tell you, is this line acting as a support or as a resistance? Is this line acting as a support or as a resistance? This support resistance really is exploring and giving you clues to who is the dominant party. This is what these are for. They're not necessarily just to pop in and take trades off. They're here to tell you, well, which party, which side is dominant, which gang is really gang at the moment. All right, so that's what that's for, right? Oh, let me get me something to drink real quick. So these lines, as we said, is going to show us our dominant party. Right here, you saw this nice bull, strong bull, right? We know that there's strong bulls down here. This might possibly be a strong bull, but you see a strong bear right next to it. So you know there's some thinking going on at this area in the market. That could be either, of course, let me make this clear, every single one of these price levels is actually a support and resistance. You can put a box around anywhere kind of on here, and it'll act as some support and resistance. But it depends. That support and resistance that you did at random is not going to be as strong historically as a properly placed box. Okay, so if you just did one of these boxes anywhere, right, the price action that happens around it is not really going to be true. It's not going to be emphasized enough for you to probably make a correct determination of which side to take on the trade. When we place these boxes properly, we can really tell which side is in control, right? And it could be helpful in just visualizing and giving us some structure, setup, right? Because the market is all over the place. The market is constantly moving. So I'm using these lines in this box as a stable point in the market that's not moving. All right? Eventually, all our price levels, the market is going to overcome, any price level that we kind of make specific, like these lines. And these lines, I said, these lines that are strongest, their earlier significance, like they might have been made way earlier, is still going to be present in the market, sometimes years later. This same area 5 years from now might still have a doji, like it might still have all this little activity 5 years from now at that same price level, 31.89, right? 5 years from now, you might look and you'll see that it stopped at 31.89 again and thought about which way it needed to go, all right? We see the market come down to one of our lines, right? This line, we're saying that should be heavy support, right? We should have got heavy buying here. Look what's happening. Market pushing through, right? We know usually, though, many a times that market will fake that push, right? It'll fake through there and pop back in. So let's see if it does that. Usually if it does that, it kind of does it kind of quickly, over like the next candle maybe, right? This looks pretty strong. Went all the way down below the 75 mark. Who knows where it will actually stop. But it's broken. Look what happened when it came out of our box. You see the level of acceleration that happened? Right? Everything else was pretty slow. Then it grew in acceleration to come out of our box, right? Giving a hard nod to the bears, right? It's saying we bears are really strong and we're ready to tear this club up, right? The bulls at 31.73. Right now they're buying 31.73, high 31.73s. This is where the bulls started coming in, right? Now you pretty much got to figure that these are strong some strong bulls coming in here, right? So if the bears overtake them again, right? If they overtake them again, we'll say that these bears are very strong, very, very strong, and this line is definitely has now become a resistance line, right? We're finding interest in this going down. We're looking for this price to actually come back up to that line and say that all this bear move was actually just a fake, maybe. So we want to see if these bulls are going to have enough strength to come back and touch that line, right? And prove if this is going to be a resistance now. Because if it touches this line and gets resisted, it proves it. If it touches this line and gets absorbed back in there, well, it's not a resistance really. It's more of a support again, right? Biggest thing to always is to remember that these lines can change. They change from being supportive to being a resistance. What's the difference between supportive and resistance? Support helps a person, builds a person up. Resistance knocks them down, right? You resistant. If I'm resistant you, I'm pushing you away. If I'm supporting you, I'm pushing you up. I'm building you up, right? This didn't get all the way to here, so we might just say that this is a very strong push. It didn't even kind of make it back. It gave us a little reaction back. Didn't make it all the way back. Kept moving. Is this a strong bear? There's a good possibility that this might be strong bears in the market, right? Good possibility. Let's just go look and see what's going on. The possibility is greater also because, look, we're in a bear market right now. So we don't expect the bulls to be able to overcome, the bears just anytime they want, because it is a bear market right now. These bear markets have a tendency to drop kind of, hard. Like they tend to fall quickly. Like 1 minute they're hanging around at a price, next thing they just fall. Let's see what's going on. What prices they built? So they ain't buying nothing right now. 31.68 is being sold down. So they're selling down 68, 66. They're selling down 68. They're selling down high 68, more like 70. Right? Let's see. There must have been some bulls coming. Here we go. Looks like we got some bulls coming in market. Show some strength at 31.66. 31.66. Down here, that's a price 31.67. Let's just watch it for a while. You see, we're in a strong bear market right now. So for these bulls to do anything, they gotta have some strength in their bodies. They gotta have a soul to them. 31.67 is still 31.67 is holding. We're under heavy bear assault, a heavy bear attack though. Let's see. And you shouldn't. We usually, for the novice, you should always just go with what this trend is doing. Right? This trend is going down, so we want to usually look for a strong bear. Right? And 671 has strong bears. right? But we might not even make 71 because of where the price is at this time. We'll have to go down to like 69, how the price is moving. Let's take a look at it. Let's just take a look at how this price is moving. They're buying up the high 68s now. So you might not even want to be there. You want to be up at all the way up at this 71. And then you want to look to see if they're buying or selling again. I like the buy side of it. I think more so than the sell side. At 69, let's look at that. At 69, I like that better right now. Let's look at it. Let's just watch it first. Yep, 69, very strong, right? 69 was strong. Let's go way up to 71. 71 is where it might get a little shaky. Look at it. Looks like we got buyers at 71. We got buyers at the high 70, the mid 71s. Now the low 71s. Right? So we found buyers at the mid 71 also. I'm more partial to the buy side, I guess, on these types of trades. That's why I look at the buy side stronger, first probably. But let's watch some more of this, because it looks like the market might have shifted down, but we're gonna wait a while and see if these bulls come all the way back up here or not. All right, let's wait a while and just see if they do though. Because if they come back up here, that probably would just say we got to push this down some, and now say the strong bulls are coming from down here. Here's a strong bull line here. You know this is strong because we were in a downtrend, and look at this line defies all this momentum, right? Do I expect it to hold for a long period of time? No, I expect it to kind of turn around and then bounce again off of this point or this point, one of these points. This becomes support again, or this becomes a light support, and this becomes a stronger support. But we have to watch to find out. Okay, none. See, market moves in such a strong fashion, we don't even have any strike prices, option price. This is a good illustration of how the market, it'll come out these boxes for a little time, but then it'll go back into those boxes. It might go back in there with a rush. See how powerful that move was back inside that zone? Because that's where they want to trade at. The institutions took the price down here so they could buy it back up. That's how they make their money. Then all day they'll be trying to shake people loose. If you look almost at this halfway mark of the box again, look, the bears strong move down at that halfway mark, right? That's look like strong bear, right? Down here we should see strong bulls come back in the market if this is a strong support line still. If not, maybe down here will be the strong bulls. That's why we are constantly observing, because what is at hand is always who's more dominant, who is in control of the market. When we know that, we can trade off of that, because all we have to do then is time what's happening in the foreign, our currency market, with what's going on the platform that we're using, whether it be Nadex, whether it be BET Online, whether it be our Oanda account, right? It's coming close to the 8 o'clock hour. I'll probably be off I'll probably come off about that 8 o'clock hour, because that's the time the market can get somewhat erratic. And we're retail traders. We don't have any special lenses in the market like the institution does. So we're better suited to stay on the sideline, right? If we're gnats, that's what we are in the market. We're just little gnats, little bugs you can barely see. And those bugs can be easily killed, right? You see one of them and bang, smack it dead. The animal's tail hits them away, bop, bop, bop. Those bugs are easily killed, and that's what we are. But the one thing about bugs, how do they work? They flutter by and hop in and out. It's hard to catch them though. It's hard to catch them, and that's how we have to be in the market. We got to be hard to catch, because we're retail traders. We're not institutional traders with enough money to just move the market and influence the market. All we can do is just watch what the big money does and be a part of those moves. Just be a part of the big money move. Be on a coattail. That's it. You just like a dog riding a turtle. You hop on top of the shell and just let the turtle walk. All right? Look at the strength of the bulls, right? See the strength of the bulls? Now we say that once it gets to this part of the second half of this, the bulls will get weaker, right? Because there's not as many strong bulls usually at the second half of the move. The first half of the moves have all the strong bulls because they created the move. The second half of the move is usually people hopping on from the sidelines getting into the move, or people that were in the move already are taking profits in the move. And so everything is weaker on the second part of the move, unless it's just a very strong dynamic move. Kind of like this move was pretty strong, because you saw afterwards the bulls will push back. They came right back to it. And now the market's going to keep going a little bit. Might even come out the box some, because of the amount of bears that might have been caught up in that particular move. Anytime there's a hard fake in one direction and then the market shoots another direction, you can expect that the market overshoots its targets a lot of times because of the momentum in the market, people from the sideline jumping in, and all the other emotions that make people trade. All right? Let's take a look. I always think that's going to not do anything, so let's just take a look. On the screen lag today is getting on my nerves. 31.90, 31.91. It's probably selling that down. That's what it looks like. Yeah, 31.89 is getting sold right now. 31.89, 31.88. They're already at 31.88, getting sold. Let me see. Let me see what they're buying up. They're buying up 88, low 89. Right? So they're buying and selling right here, 89. We probably get a stronger move. These 91s. You see the market must be moving. Yeah, doing a little move right there. We probably missed this right here, especially because my screen is lagging here and I can't get no ordering. 17, right? 31, 81, 82, 83, 87, 88, 89, 91, 91, 87. See, this one, we waited, couldn't get that move a little too quickly for us. Maybe we have to go down to the 85 where the strong buys are. Some strong buys down there. Oh, the screen lag today is critical. So they buying low 50s right now. And we don't have much time left on the clock anyway, so the 50 would be good probably, but you don't play around at those points at times. Market is funny like that. This is at the top of the 8 o'clock hour. We'll scoot out of here right now. We'll be back shortly. Let me download this information. This is good information right here. Go through this, actually. Really go through it and understand, kind of understand what I've been saying in the videos for Monday, Tuesday, and today. Monday, Tuesday, and Wednesday videos are just going over how the price actually moves, right? And they're going to set us up for the future so we can consistently make money in this market every single day, right? Even getting to the point where we don't lose for hundreds of days, okay? So let's just be diligent in our work and be patient. I know everyone wants to just pop. Let's get to the trades. But before we do that, let's get to the framework and how to look at the market. So you've seen the market somewhat the way I'm seeing the market. So when you see me take a trade, you can be confident into taking the trades also. All right? Very important part. What I want you to kind of do next is just study this. Also get onto the $2 trade. Get into the $2 trade. Get my link for that, because we're going to be on there sketching out a lot of these ideas on the $2 trades, right? Because we're going to use our Nadex account as like our savings bank, right? We're just going to take our one trade in there every day. We're going to take a great trade in there every day and just keep building that up a day at a time, because those are $100 trades. So while you're learning, you don't want to really lose that, right? But what we're going to do, we're going to hop into our BT online. It's over here, right? Got a link for that for you. We're going to hop onto that platform, and we're going to be able to do some $2 trades, and we're able to practice all this stuff we're talking about. So we don't have to practice on the demo account. We can practice live and make a couple of dollars too, all right? So that's what I want you to do next. Go check that information out. Get yourself started so we can actually get started, all right? Enrico Janko, IMtheSIGNAL, powered by the mighty team Alliance.